welcome to this edition of Closing Trades right here on ET Now. With me, Asha Faridi. I've got Ajay Sharma as well joining in on the show right now. And for the markets, it's a late reaction coming into the budget, but a stupendous reaction nonetheless. So while we may have eased off from the top of the day, we did make a fresh all-time high today on the index, and it's really oil and gas majors which are powering up ahead, led of course by OMCs. Look at the tearaway move that you're seeing on BPL. Ajay, I don't recall the last time BPCL was up double digits.
Well,
forget more than 5%.
It has actually, run 40-50% in the last 3 months and still trading at single-digit price earnings. So this is one section of the market, repeatedly is being called relatively inexpensive other PSUs, and that's why what a move. I have not seen these kind of moves like mid caps.
Absolutely. Just yesterday Purinju as well gave us his top pick, which was ONGC, and the same rationale is what's applicable there as well. But aside of what's happening within OMCs and the energy space, look at what's happening within Adani Ports, for instance, after its numbers. Tata Steel has made a very, very solid move today, a 3.5% uptick there. Some of the beaten down IT majors have made a comeback. It's a solid 3% move coming in on TCS alone, near 2% on Infosys as well. ICICI Bank, Kotak, Reliance, Bajaj Finance, they're all powering up further. Although HDFC Bank is the one, perhaps the sole culprit, which is why you're not still latching on to that all-time peak, because that's completely swung back into the red, and that's down about almost 1% right now. So big drag, even though the stock started off well in trade today. Axis as well has dragged lower. I can see ITC, Maruti, Nestle as well ebb off, and L&T too has drifted down in the red. So HDFC Bank, L&T put together, that's why the index is off the day's highs. But Paytm, that is one stock which continues to be beleaguered amidst all the reaction that you're now getting from brokerages. The stock, remember, is locked in lower circuit for a second consecutive day. And, this after RBI slapped that regulatory action on Paytm Payments Bank, saying that banning the lender from accepting any fresh deposits in its accounts. Not just that, the central bank has also barred the lender from facilitating any credit transactions or conduct fund transfers, which includes platforms, UPI facilities as well. Let me take it across to Ankur to understand the way forward for Paytm now.
Yes, one of the pertinent questions for Paytm has been that why Reserve Bank of India took stringent action on Paytm Payments Bank. Now, as far as sources have informed us that Reserve Bank of India had given enough warnings to the bank before taking this kind of action. In fact, we know that earlier this month, there were several meetings which were held between the management of the lender as well as Reserve Bank of India. And after that, Reserve Bank of India came out with that notification. Now, if you see the timeline of events since the company had started, in November 2017, the start of the company happened and the operations were started. And after that, if you see in June 2018, first action came from Reserve Bank of India. The onboarding was banned, but a year later, this was allowed by the Reserve Bank of India after some compliances happened. But if you see in October 2021, once again, there was a penalty of ₹1 crore which was imposed by Reserve Bank of India. And in March 2022, once again, there was an action due to non-compliance on the company by the regulator. Finally, in October 2023, there was a penalty of over 5 crore which was imposed on the company. And in January 2024, Reserve Bank of India came out with the notification that you cannot accept deposits as well as credit in Paytm Payments Bank. Now, the bigger question is what happens next? What we have understood through sources is that Reserve Bank of India's latest order gives no timeline to the management to reply on that. If you read that order carefully, it does not give a timeline that whether or not the company can adhere to these norms and come up with the rectification things. Apart from that, the deadline of February 29 has been given so that there is no panic in the system and customers can easily do the actions which they want to do with Paytm's wallet, with the FASTag, with all the associates of Paytm Payments Bank. But here, the company has clearly said that there will be no impact on customers after the guidelines which has come from Reserve Bank of India. Now, the important thing here to note is that RBI's action may be precursor to cancellation of the license as well, and sources have informed us that that may be one of the consideration of Reserve Bank of India. But all in all, company is claiming that they are adhering to the guidelines which has been given by Reserve Bank of India, and they want to see minimal or no impact on customers.
All right, Ankur, thanks very much for that. So second day in a row, a down circuit. But a lot of conversations are emerging on the street now among market men, whether the business model itself of Paytm has been structurally shaken, or at some point in time some value will emerge. But it's a risky trade, risky bet unless you understand the situation. So be careful around it. But there are companies which are in focus due to earnings, and Castrol India is one company at one point in time was gaining 8% in trade after the results. Sandeep Sangwan, MD of Castrol India, is joining us now to talk more about the earnings and also some new initiatives which the company is taking. Mr. Sangwan, thank you so much for joining us. Let's start with the volume growth, because that is something to watch out for, both from the OEM as well as after sales. Do you see, the improved volume growth coming in from here on?
So before I get into the volume growth, what I'd like to share is, as you're aware, we announced Jan to December results. That's our financial year. And I think we were very happy with the performance that we've seen. Our revenues at 5,075 crores. This is the first time we've crossed 5,075 crores, which is 6% up. PBT is up 8% at 1181 crores. And as we celebrate 125 years of Castrol globally and 115 years in India, and also in line with the performance of the company, the board recommended a total dividend of 7 rupees 50 paisa. And I'd like to thank our shareholders who stayed invested with us. And we also launched, to drive business growth, we launched key initiatives in second half of 23. We launched Pragati Ki Pathshala, which was for truck drivers community. We also launched India's Ultimate Moto Star, which was for the bike rider enthusiast. And we've also been expanding our Castrol Auto Service network, where we have about 450 Castrol Auto Service multi-branded workshops. These are franchise kind of concept. These are not owned assets. We've also expanded into rural Bharat, where we cover about 30,000 outlets now. And the launch of auto care products, which we launched in May of 23, is giving us good traction, which is available now in 21,000 outlets across the country. And I think on the back of all of this, fourth quarter, our volumes were up by about low double digits. And I think you have to keep that in context, because if you remember, 22 was very inflationary. We had to take multiple price increases to manage our margins, and that had a negative impact on the volumes in second half. But as things have kind of softened in 23, we passed on some of those deflations back into customers and consumers to balance volume and margin growth. So I think that's also helped the quarter four performance.
Sure. Sandeep, also wanted to understand, while your margins have expanded on both sequential as well as annual basis, was it only because of lower raw material costs, or did higher volumes also contribute to the same?
So I think volumes have definitely played a role in driving the margin. And typically from an EBITDA margin perspective, we want to operate in a range of about 23 to 26%. Okay. And fourth quarter was specifically high because of a combination of volume growth and cost. But I think our intent is, if you look on a full year basis, our EBITDA margin is at about 24%, okay, which is 1 point improvement versus 22. And we would want to kind of keep it at those kind of levels. And what we are always focused on is making sure that we're delivering value to our consumers and customers. At the same time, from a pricing perspective, we're also conscious of that. We also have to drive volume growth. So it's always a mix between volume, price, margin that we try and balance and still continue delivering good value to our consumers and customers.
Surely it's a tightrope between growth and margins, right? But given that context, what's the expectation as to how the margins will pan out for the next 12-18 months?
So I think margin profile, as I said, would continue to be within that band of 23 to 26%, whether it is 24, 25. We'll see how the environment is. I think we're still expecting some volatility in the environment. I think while the Indian economy is doing well, and I think it will continue doing well with all the fundamentals in place, we don't know what is the impact of geopolitical events. Like, for example, we're seeing tension in the Red Sea area, which is already impacting freight rates. Okay, so I think we'll see how things progress and then continue making decisions which help us both drive top line growth and also protect margins.
Right. Mr. Sangwan, the one side of the business which is really exciting the street regarding your company is on the EV side. The parent company already has a portfolio of EV products, and now we understand that the Indian unit, which is your company, Castrol India, would also be expanding the product line on the EV related products. Talk to us more about it.
So I think as far as India is concerned, we already supply EV fluids to two of the largest EV car manufacturers in India. We have a brand of EV fluids under the name of Castrol On, which is already available in India, both for our OEM partners, but also in the retail market. So that's on EV fluids. And globally, I think we said about 1.5 years ago, we're going to invest, BP is going to invest about 500 crores in a R&D facility in our parent company in UK, which will look at thermal management. And globally, we're seeing that there are opportunities as technologies evolve around data centers, around batteries, that there are opportunities around thermal management fluids, okay, which work with batteries and battery storage systems. And that's an opportunity area for the future, which we are actively kind of looking at.
Okay. Your dividend payout was higher this year as well, around 86%, right? So should investors expect similar levels going forward as well?
Yeah, I think our intent is to give returns back to our shareholders, okay? And typically, we've been able to kind of keep our dividend payout ratios around 80% plus. And I think we're quite confident that the business will continue doing well and will continue. It's been a very consistent dividend paying company, and we want to continue that as per our policy.
On that note, sir, we let you go. Time now to slip into a very short break, but don't go anywhere. We have Prateek Agarwal, the Executive Director, Business and Investment Strategy from Motilal Oswal on the other side of this break. We'll discuss with him the market fundamentals. Don't go anywhere.
All right, so Prateek Agarwal of Motilal Oswal PMS is joining us now. Prateek, afternoon, good to see you with the big smile on your face. You were telling us offline that you are a beneficiary.
AMC.
AMC, of course, yes, but the PMS is the part of AMC, right? A very large and meaningful part, I would say, which was reflected in your numbers as well. But I like the smile on your face, beneficiary of both the valuation going higher and good flows. Does it appear structural, the flows part at least?
Oh yeah, that is something we have been covering over, I think, every video that we have done from this house, which gets released into the market first of every month. See, our thought is for the same reason that people are able to buy cars and ACs is the reason that people can come into the equity market. It is basically that they have more money, the per capitas are increasing. When that happens, from a nation of savers, you become nation of investors. You have the ability to take risk of uncertainty and be in the equity market. So I think with the transition that we are seeing on the per capita levels in the country, this is a very structural thing which is happening. It has been happening for now 3-4 years. I think this is just the beginning. It will continue till the India story continues, which is the demographic dividend.
Okay, one part of the market, sure, I get your point. And in fact, the entire AMC, mutual fund distributors, market participants, some brokerages, and even this, the technology-led, backdrop services providers, all of them got re-rated last few months. But one sector, which is the envy of many, just because of the sheer missed out feeling it gives, is the PSU basket. It got massively re-rated, but now upstream, that is getting re-rated. Do you see further scope for improvement in kind of valuations there, or you think they're fully baked in now?
See, OMCs are, if you believe in, let's say, green energy, okay, then one would tend to see OMCs as end of life cycle businesses. And hence, businesses where very small terminal value will be accorded. Now, does that warrant a 2, 3, 4 P? Probably not, because that end of life cycle is also several years away. But this is a space where one has to ask a question: what happens if the stock price drops 10%? What happens if it drops for some reason 15%? What confidence do you have of it coming back? Because growth in volumes processed, sales, etc., is just going to be 7-8% over next few years, and after that will probably taper down even more. So these are those kind of businesses, very deep in value, maybe end of life cycle, maybe they have 10-15 years more to go, but low on growth versus the economic growth rate, low on earnings growth once you normalize earnings versus the index itself. So as a value play, one can look at it, but with the caveats that I shared.
Pratik, just wanted to understand what's been the learning on what to invest and what not to invest in with this entire Paytm episode. I mean, still got sellers in the system. The stock opens and straight away lower circuit for the last 2 days.
Yeah, so the biggest lesson is, high on innovation companies should not dabble into businesses with very, very strong regulatory oversight. The two don't go together.
With high, return comes high risk as well. So need to kind of keep that on board. But Pratik, what's your sense on the private banking space? When earnings were good as well, the stocks weren't moving that much, and now the earnings growth has started tapering off a bit. What should one do with respect to the private banks? Add for a long-term portfolio or wait for better entry levels?
No, so let us look at it this way. Banks, lenders accounted for over 35% of an index. That is as high as it gets. 37, 38. They accounted for 40% of growth of earnings in the marketplace. Does one believe it can get better? It is almost like in the listed space, close to 40% of the profits were done by banks. Everybody else put together makes 60%. This is something which structurally is not sustainable. People are doing other enterprises with a profit motive. It should add up to more or much more significant part of total. So small point is, as a part of total profit pool, while banks will grow, maybe they will account for a smaller market share of profits, which then means they should account for smaller market share of index, which also would then point to smaller market share of a portfolio of guys who want to be close to the index. So that is one thought. The fact that we are looking at interest rates coming off over the next 5-6 months, and it is a very good possibility given the way fiscal consolidation has been the focus in the budget table yesterday. Drop in interest rates are not very good for NIMs of the banks, which again is an issue that has to be tackled. So as a house, frankly, we have been underweighted banks significantly versus the index over last 1 year.
About financials, public sector, but which are the other areas that you would, suggest people to book profit out of? Railways, defense, they were looking a lot more overheated. Real estate, for that matter, has started seeing a bit of a derating cycle, at least from the brokerage houses. Any specific pockets where you think over exuberance is there?
No, so when markets are at a high, obviously there will be many pockets where there will be over exuberance. There is over exuberance in all ownership classes, private and public, MNCs and Indian or professionally run. So at the stage of the market we are in, that is there to be there. My whole thought is some bit of it is extreme and may result in larger losses, but most of it is not extreme. Okay, and for a trader, maybe it makes sense to sell and try and buy it lower and all of that. But one simple thought that I have is this is a period where the spaces which are doing well may have some mirroring in what did well in the 2000 to 2007 kind of a period where again gross fixed capital formation, for example, expanded as a part of the GDP. We are again beginning to see that for last 2 years. Typically, it is not a 2-year thing; it is a multi-year thing. So we have probably seen 2 years out of 7-8 years of that cycle. So I think the same spaces which did well over last one, this period is not like 2008 to 21 where growth in EPS of the index, the large cap index, was just 5.1%. This is more like 2000 to 2008 kind of a period where growth in index earnings was mid 20s kind of stuff, and these mid caps grew earnings faster than large and these small caps grew earnings faster than mid. So it is that kind of a period. So I think one should look at that period, try and gain knowledge from there. Maybe the success rate would be higher.
On that note, we let you go. Thanks so much for making time and speaking with us. But for the markets, we have taken a turn for the worse, and take a look at the Bank Nifty as well. That's seen a cut of almost 800 points from the highs of the day, and that index is now in the red. At one point of time, it was actually outperforming the frontline index, but that has turned now. Axis Bank, HDFC Bank, Federal Bank, IDFC First, these are some of your top losers. So it's the private sector banks yet again which are coming under pressure. Time for a quick break. Don't go anywhere.
Enterprises actually, which has ebbed off quite significantly from where it started off in trade. But still in the thick of earnings, so let me welcome on board the management of Mphasis. We've got on board with us Nitin Rakesh, the CEO, and Manish Dugar, the CFO. Nitin, hi, afternoon. If I could begin the conversation with you. Despite Silverline acquisition, your top line growth has been weak and the decline continues. When do you see a recovery coming in?
Yeah, I think keeping in mind that there was a lot of seasonality impact in play, and of course, we've seen the impact of that play out across the industry. I think if you take that issue out, I think we've seen pretty good stability in revenue top line, of course, on an organic basis. We do believe we have visibility to revenue growth in the current quarter. And I think as we get into FY25, we'll probably have a better idea of how the client budgets are panning out. But at this point in time, I think we called for bottoming of performance in terms of revenue last quarter, and that theme continues to play out. And stability in revenue line was visible all through Q3, with a view that Q4 should be a growth quarter for us.
Right. Monish, you have been working on diversifying the revenue stream as well. Talk to us about the progress made on that front and how exactly are other businesses performing this quarter as well.
If you look at the last 4 years, right, we have had significant strategic change in direction from the constitution of revenue perspective. While we are very excited and happy with our performance in BFS, and that continues to be our growth driver, that is where we got all our referenceable customers, and all those customers continue to deliver significant growth and momentum. We have also been able to, using NCA channels and through acquisition of new logos, been able to invest and grow other verticals as well. And we have now 4 verticals outside of BFS, which are already scaled to more than $100 million annual run rate, excluding the DXC revenues. And as we look at the revenues from top 10, 11 to 20, and 21 to 30, we continue to see scale and growth both in the top 10 and in the 11 to 20 and the 21 to 30 on a YOY basis, and on a consistently able to gain more wallet share and become more closer to the customers from a strategic perspective. I think if you look at geography, if you look at vertical, if you look at clients, and if you look at services, whether it is AI, whether it is new gen, whether it is PPS apps or ITO, across all, we are becoming more and more relevant to our clients, and we are happy with our performance till date in terms of being able to strategically diversify the revenue. As we look forward and as we invest in whether it is capability, whether it is geography, whether it is leadership, we are now putting building blocks to make sure that this momentum continues.
Nitin, the deal wins also have been a problem. For last 2 quarters, we have seen a number of sub $300 million. Has there been a bit of a leakage and Q4 will be better, or this is the run rate we should expect going forward?
Yeah, I think keeping in mind that large deals by definition are lumpy, I think the right thing to do is to kind of take a trailing 12-month view or a YTD view for 3 quarters. And I think on that front, we had a pretty big Q1 in terms of deal wins, a record quarter for us. We are still very focused on rebuilding the pipeline. I think on a YY basis, the pipeline is up 12% despite that big conversion we did in Q1. And I think the focus right now is to continue to focus on converting that TCV to revenue while we've continued to build the pipeline. And I think we're still pretty pleased that we had 4 large deals in Q3 as well. And we'll continue to focus on converting the existing pipe to TCV also. So I think not too disturbed by the swings in the TCV number driven by large deals, but very focused on making sure that we are able to convert already one TCV into revenue, and of course, move deals through the pipe into closure stage as well.
Right. Manish, your EBIT margin was also a little soft. What were the factors at play and what's the trajectory expected going forward?
Actually, if you look at it, we expanded the margins to 16%, and we are pretty happy with our ability to work on the operating levers and deliver to our guided northward bias to margins as we had spoken in the previous quarters. This 16% margin that I'm talking about is after adjustment of the 1.1% charge that we took for Silverline, which we had guided as well. And if you look at it, this was a quarter where we had a furlough, and we had a quarter, where we were also facing the seasonality impact. Despite that, an expansion in margin actually is a I would say welcome performance. As we look forward, while we will give a guidance for what to expect as a range of margin for the next year when we do the Q4 earnings, but for the Q4 perspective, we are maintaining the guidance range, which is 15.25 to 16.25, obviously excluding the impact of acquisition. And as we go forward, we continue to have operating leverage that will keep helping us having a northward bias in the margin. However, our stance on revenues will remain forward-leaning, and as we have philosophically commented earlier, we will continue to invest in growth and try and ensure that the margin remains in a stable range.
Right. All right, guys, thank you very much for joining us, and good luck on deals front as well for the coming quarters. Mahentesh Sabard is now joining us now to talk more about market. Mahentesh, the market may have come down lower, but one section of the market in the last 2 sessions are getting almost re-rated, which is OMCs and PSU banks. Which out of the two you are more comfortable buying at current levels?
So I think it would the PSU banks, which are far better related to the OMC. OMC is, as you are aware, quite cyclical, linked to the prices of oil globally. Many of the oil geopolitical tensions, of which we are not really immune. And so this re-rating that seems to be happening on the oil companies is a bit of a worry. And the push is too large for the future ahead in terms of outlook. The PSU banks are far better because while the consumption story is still yet to pick up, we have the corporate story in terms of capex growing quite well, and banks are well poised to capture the next round of interest rate reductions that we might see ahead. So from a NPA perspective, that is quality of book perspective, to NIM perspective, to even growth perspective, everything seems to be in a sweet spot. They are well capitalized as well.
So that's about the PSU banking space. But for the markets, let's take a look at some of the result reactions coming in. JSW Infrastructure just reported its earnings. So let's take a look as to what the stock is doing right now. You also had other names like Engineers India, which reported a good beat, and all of these stocks are actually seeing a reaction as well. Nuresh, if I can come to you for Engineers India, we have already seen a rally in OMCs. Do you think Engineers India could be the next one to follow? Because of course, it's one of those, consultants for them, as well as give us a sense on JSW Infrastructure if you have enough chart history now.
Engineers India as such has moved up already over the last 3-4 months. So from 120, 150 levels, the stock is now at 250, 270. So in this band, the risk reward is not great, but one can continue to ride on because the stock has come back above the highs of 2017 and almost 2010 after a really long time. So in this case, it's a hold. JSW Infra, although the charts are not much on an extreme short-term chart, till the time the stock holds 220, the bias remains positive.
The stocks which are suddenly perked up in trade, one is Swan Energy. Pull up that one. In fact, increasingly, though the numbers came out last week, this stock is now being seen as a more of a defense play after acquiring that Pipavav shipyard than a LNG terminal. Ventesh, have you looked at Swan?
Not really.
Not really. Okay, I thought so. Kunal, what about charts then? At almost nearing $700.
Yeah, so I think the last 2 quarters have been exceptional in terms of volumes for Swan. The last quarter volume was almost 34 crores for the stock, with an average volume of just 6 to 5 crores. The stock gets seen on a quarterly basis. So that itself tells you the jump of volume and the strong participation the stock has shown. In the previous quarter, it moved from 300 to 525, and now it's just seeing a strong follow-through up move. So it's a strong volume-based up move, which means that this trend should last for the stock. The only concern with the stock is the recent rally in terms of the prices on the weekly charts has brought the indicators into a bit of overbought territory. So the RSIs are almost 88, 89 for Swan on the weekly time frame, which means there could be a potential that in the next 4 or 5 weeks, you might see an odd phase of a correction for the stock. So buy on dips in that regards could be a good strategy in case if the stock dips down towards 600 to 620 odd mark.
Okay, just looking at some of the other movers then in trade, while of course it's banks which are a big drag, Axis, HDFC Bank, ITC, Adani Enterprises as well have now drifted into the red, and even Nestle Maruti have quite come off from where they started off in trade. Bharti's flattened out. Tata Motors ahead of its numbers as well is getting a little bit flat. But Kunal, earlier in the day we were talking about, or I think yesterday, Tata Motors versus Maruti. Well, Tata Motors definitely is now the most valuable auto company. How do you stack up the charts of both, and where is it that you think there is still opportunity to buy?
So Maruti could be a fresh candidate of a buy. Tata Motors is still quite bullish in terms of the chart structure. My sense is that this rally over the next maybe couple of quarters, 2-3 quarters specifically, I think should take the stock closer to the 4-digit mark, if not break past about those levels. Maruti, I believe, after yesterday's price move and the setup prior to that, the last 3 months of a price correction from 11,000, 10,800, 900 levels towards sub 10,000 mark, the stock retesting 200 moving average, and then after yesterday's price action showing clear signs of a price volume breakout, I think is also a very good buy from current levels. So it depends now on the risk appetite of investor. If someone is looking at a fresh buy or a fresh breakout candidate, then I think Maruti could probably be one of the stronger candidates over here. But I think if someone wants to ride the trend on the upside, then I would still believe Tata Motors is good for at least another 15% over the next maybe 6 to 9 months.
Yeah, and we should have run the expectations of Tata Motors as well, because of course the earnings will come out today. With respect to the year-on-year growth, we are working with a 21% increase. The profitability is expected to show solid growth of 57%, and it's going to be JLR, which is going to be a bit of turnaround story. But separately, in terms of the OMCs, that's one space which is firing away. BPCL is up around 10%, ONGC is up 4%. Of course, HPCL, IOCL has been doing their bit, and other public sector entities, whether Power Grid, NTPC, they're all firing away in the trading session. But since we are talking about the power sector, let's take it across to my colleague. He's been having this conversation with the Power Minister, R.K. Singh. Listen into what they had to tell us.
You see, this segment of the scheme will focus on all those households which consume less than 300 units. Now, for them, electricity will become free. They don't have to do anything. Our organizations, the central public sector undertakings, they will go, they will contact them. they will install the capacity. And that's it. And thereafter, the power consumption for those households which consume less than 300 units will become free. Now, how this will be done will be that, we are increasing the subsidy a bit for those consumers which are below 300 units, who consume less than 300 units. So that we are increasing to about 60% it will be. And the remaining 40% will of course be loan. But that loan will not be taken by the household. That loan will be taken by organized by a central public sector undertaking. So the householder does not have to take any loan, he doesn't have to do anywhere. That loan will be paid off by the excess units which are generated. So that will pay off the loan, and the loan gets paid off in about householder, and the excess, the householder will get the benefit, revenue from the excess units which are generated.
Okay, so will you also increase the overall subsidy amount, especially for lower capacity?
For the lower capacities, the overall subsidy will go up to 60%, and for the hill states in the northeast, it will probably go up by 10% more.
Okay, and what about the funding? As per the some,
I have enough. I mean, we have sufficient funds, and whatever funds are required, we will provide those funds. There is no difficulty. As I said, we are giving 60% subsidy, 40% will be loan, the banks, and that loan gets paid off by that excess units which are generated. So, that is how it will be. The householder gets the benefit of 300 units free, and that is only for those households which consume less than 300 units.
in addition to that, one other important aspect which was there in the interim budget is with regard to development of offshore wind energy, which is around 1 gigawatt. That will be and government will provide the viability gap funding.
That's the next dimension which we are adding. You see, we've already emerged as a world leader in renewable energy capacity, and renewable energy pace of renewable energy capacity addition. Now the next dimension is offshore wind. Offshore wind is already, there in the North Sea, the UK, Denmark, etc. They all have offshore wind capacity. We are going to start now.
So that's about the Power Minister talking about the new announcements which have been made for rooftop solar as well as offshore wind. But shifting focus and talking about earnings which are expecting, the largest public sector bank, SBI, is all set to report its earnings tomorrow. What should you expect? Listen to what Gaurav told us.
So SBI will come up with their quarterly results tomorrow, and let's see what Street is expecting. When we talk about net interest income, they are expecting growth of 6% on a YOY basis. When we talk about pre-provisional operating profit, they are expecting a decline of 22% on a YOY basis, because in this quarter we may see an impact of wage rate revision, which was expected to be somewhere in the range of 14%, and SBI had provided in the same range only, but now it has come out at 17%, and that is why we may see a decline in PPOP, and this will also lead to decline in PAT almost by 10% in this quarter on a YOY basis. Talking about the asset quality, there are no concerns going around the asset quality. Asset quality is expected to remain healthy according to the consensus. And when we talk about loan book and deposits, they are also expected to grow somewhere in the range of 13.5% to 14% during the quarter on a YOY basis. We may see some kind of increase in the slippages because BGR Energy, one of the accounts in SBI, may be booked under the slippages this quarter, and that is why this spike may come up. But lastly, according to SBI's commentary, they were expecting some kind of loan growth to be somewhere in the range of 12 to 14%. They also had target to bring the SME NPS down in the coming days, and that is why going on, any commentary coming up on the outlook on the loan growth and also any commentary on the asset quality, specifically on the MSME segment, will be important from the management during the call of this quarter. Let's also look at any commentary which is coming up on the cost of funds, because that will drive the net interest margins for the bank from here on. Lastly, let's not forget that the SBI has the best PCR ratio in the industry, one of the lowest loan to deposit ratio, and its cost of deposits is also one of the lowest in the industry, and that is why any changes in these parameters will be also important for SBI during the quarter.
The other one that we're counting down to is also Tata Motors, which is due to report its numbers today itself. Srishti is here with what the ET Now poll is penciling in for Tata Motors.
So actually, good set of numbers expected from Tata Motors, and the key highlight will be the JLR EBIT margin. So we will have our eyes on, because we are expecting even an improvement on the JLR EBIT margin on a quarter-on-quarter basis. 7.4% is the expectation this time around, and the key driver will be the volume push. 4% growth on a quarter-on-quarter basis is what we have seen on the volume figure, and that's expected to give a push. India business volumes were actually a mixed bag, almost a flattish volume growth for the passenger vehicle segment, but the commercial vehicle was a drag. 9% volume decline is what we have seen. So not much expectation from the India business, but JLR could really take it higher. On the number front, we are expecting a flattish sort of a growth on a quarter-on-quarter basis on the top line. Coming to the EBITDA number, 3% uptick is what we are expecting, and the consolidated margins expected to improve to 13.3% versus 13.1% in Q2. Other than that, the profit is expected at 4,660 crores. That will be a jump of 23% on a quarter-on-quarter basis. But the key to watch will be, first, I told you that JLR EBIT margin, how these numbers pan out to be, the demand outlook, as well as JLR cash flow numbers is also important to track, because surprisingly this time in the quarterly update the company didn't mention about the cash flow numbers. So how the cash flow numbers and the guidance going ahead pans out to be, we will have our eyes on, but the stock has already seen a significant run up. So let's see how the numbers come out and the stock reaction as well. Back to you.
Thanks so much for that, Mahantesh. The other one which is seeing no respite is Paytm, down another 20%. At what level, if at all, you will be a buyer?
No, because the regulatory glare is such that much of their business related to the payment banks is already facing no future. And there is added suspicion that you may have the situation where their UPI business side of the business will likely be constrained as well, because they'll have to start partnering with a whole host of host of payment services providers and etc. So there will be a lot of cost restructuring that will get introduced into the business with no revenues flowing in, commensurate revenues flowing in. So we'll have a long period of pain. Very difficult to really understand what will be in their mind. The way to go ahead for the company would be actually segregate the payment bank business into a separate arm and make the shareholders actually insulated, or insulate them from any of the vagaries associated with that. So unless these key decisions are taken by the bank, by the service provider, we will not be able to take any bite in the company right now.
Right, okay, that's the take coming in on Paytm and the comments thereafter. Let's just take a look at some of the BTST trades as well before we step into the weekend. Kunal, what's on your list?
So I'll suggest a couple of buy calls, and the first one which I would suggest at current levels would be Tata Steel. That's a stock which looks attractive. Metal stocks making a comeback, so buy with a target of 150, stop us at 135. And Hindustan Copper is the other stock which is also looking attractive in terms of a breakout of sustaining about 300 levels. 335 is the target, stop us at 289.
Okay, what about you, Naresh? The BDST trade, you'll have to unmute yourself.
Yeah, so a buy on Tata Steel again, that's a stock which is close to a breakout, stop loss at 137, target price of 145. Second is a buy on Havells, which has reversed from the recent supports, expecting some follow-up here, stop loss at 1320, target price of 1380.
Okay, those are some BTST trades coming in, while metals, of course, is charged up ahead, led by Tata Steel. That's one of the key gainers, which has also been the top idea from both of our chartists. Reliance as well has had a strong show today that also managed to hit a fresh high. 29.26 is where we're currently at for Reliance's futures, 29.14 on the spot. There's, of course, TCS, Infosys, there as well going pretty strong. There's Wipro as well, which has seen a move of nearly 3% LTIM is not looking bad. Bajaj Finance too has made a comeback. Kunal, for Bajaj Finance in particular, because this was the weak link this week, do you think the worst is behind?
Well, it doesn't look like, because I think even after today's bounce for Bajaj Finance, the stock is I think around 400 points or 350 points precisely below the 200 DMA, which means at least another 5% is what the stock has to recuperate to try and get back into at least a slight positive mode for itself. So, and looking at current market scenario, the recovery, or rather the correction for Bank Nifty from intraday highs, it indicates that maybe the financials could be under pressure for some more days. So I'm not sure whether the next 300 points could be achieved into this kind of a market scenario for Bajaj Finance. But I think only about 7,200 to 50 mark is where one should look to attempt for a buy call over here.
Okay, so that's about some of those big movers. But wrapping up the trading session, of course, it was a day of fresh record highs for ourselves. But from there, we made a complete U-turn. And by the end of the trading session, not only we have flattened out, but we are just around that 21,850 thereabouts. Let's pull up the closing trades as well. In terms of the Nifty Bank, of course, there has been a massive slip of sorts, almost 900 to 1,000 points from the highest point. So the Nifty is ending just around that 45,900 mark as well. The broader markets managed to fare better, whether it was mid-cap or small-cap, both hit the record high level and at least managed to stay in the green, even if they came off the highs. In terms of individual movers, BPCL, IOCL, HPCL, all of these OMCs were gaining traction. The other public sector entities, the likes of Power Grid, NTPC, they were higher by 3 to 4%. IREDA was the other one which saw a good traction and was up around 5% in the trading session. So overall, the week has ended on the positive note. It was a big week with a lot of events, but the next week is going to be the same. We'll wrap up this edition of Closing Trades. From the entire team, thanks so much for being with us.